we have a relatively benign or stable outlook on oil prices for the balance of this year and into next, seeing Brent on average in the low to mid 40s in 2021. So not a lot of movement. But I would echo the sentiment that you shared, which is that commodity markets more generally are going to become a big part of that sort of macro expression. We've seen big swings in supply chains. We've seen big shifts in demand as well. And you have big recoveries in markets like copper and iron ore. And so I think that as we look forward over the next 18 months and we see how this recovery plays out, if developed market bond yields are not allowed to move, or there's a lot of quantitative easing that's keeping rates volatility low, then we need to look to some of the more traditional macro factors like commodities and currencies to get that kind of signaling power.
In terms of what happens next with regard to oil patch, though, just one quick question. I mean, basically, we saw from Goldman Sachs last week this report suggesting that we could see oil up to as much as $65 a barrel in 2021. I had an interview with the Russian energy minister, Alexander Novak, last week. He said, while he was optimistic, he felt like that we were probably going to be in a lower range between 45 and 50, 55. My question to you is that just overly optimistic, even though we're seeing that recovery in China? And of course, most of the oil from this part of the world, of course, heading to Asian markets.
Yeah, look, I think there's a couple of different themes there that you've correctly touched on. The first of which is just the simple question of how much does global demand recover. Yes, we've seen a big recovery from very poor levels in March and April, but I think we still have quite a few economic headwinds to contend with, whether it's the amount of debt that companies and governments now have to service, whether it's the repair of consumer and corporate balance sheets. And so I think it's hard to imagine a scenario where we get explosive demand growth for any commodity, but especially for oil over the next 6 to 12 months. Now, on the other side of the equation is supply. And one of the things that our teams have paid very close attention to is how much supply destruction has there been in the United States in the shale oil industry. We would have thought that with more challenging capital markets conditions and the low level of oil prices, that shale would have had more significant headwinds to face. And I think that's still the case. If you do see supply taken off market because of those economic and financial challenges, I think that could augur a very positive oil story 1 to 2 years out. But I think it's too early before that becomes a really tradable theme.